Welcome, you're watching Kaleidoscope Ceylinco News Capsule. Sri Lanka's forex reserves dipped drastically to 1.7 billion US dollars in September 22. However, it has been showing signs of improvement, with reserves growing to nearly 3.5 billion US dollars in May this year. This may be negated somewhat with the lifting of the import ban on some 240 items last week, which will push our import bill up by about 200 million US dollars. So, the panacea is to prop our foreign reserves. Associated Frontier Research Arshad Ismail has some tips. Arshad, we've been relying on our exports to prop up our foreign exchange reserves for some time now. But given the looks of things, our exports are not doing too well, especially in the apparel sector. How do you think we should prop up our foreign exchange reserves?
So we've seen tourism come up, right? We've seen the recovery there. We've seen worker remittances improve, coming into monthly averages of around 400 to 500 million. So those inflows have been coming, and also one factor that a lot of people don't see is that our imports have contracted a lot, right? It's so low that it's at levels of where it was during 2010, if you look at non-fuel imports. So maybe in the long term, what we can do is we can attract definitely foreign direct investments. Like you said, exports have been going down, but long term, we should take some measures to improve that, right? Maybe we could look at diversifying. Now, we've been into the apparel sector, the tea sector. We've been too reliant on that for a long time. So maybe it's time that we diversify a little, maybe even diversify our market.
You mentioned imports, that our imports are very low at the moment.
Yes.
But now there is talk of imports being, bans being lifted. What would happen then to the status quo?
One thing that we've seen is when we look at other countries that were at crisis, even though restrictions have been taken off, you don't see a big surge in demand, because given inflation, given cost of living, people are not really ready to import yet. I think people have got used to this kind of lifestyle. So it's not that, just because the restrictions are taken off, you will see imports soaring so high, right? It would be a gradual increase, a little by little increase. So that, yes, can bring down the reserves to a bit low.
You also mentioned diversifying. Where should we diversify, and what are the challenges we may face in diversifying?
Simple example that I can give is maybe we can plug in with the growth of India. India is an economy that is growing really fast according to World Bank statistics. So why don't we also connect with our neighbor? Maybe, for example, if they are exporting, let's say they're exporting, let's say, a motor vehicle. Why don't we plug in and, let's say we manufacture the tires for that? So along with their growth, we would also have some sort of thing. Something like that could definitely help.
Growing foreign remittances, FDIs, and also our tourism. Very briefly, what are the challenges that you foresee?
Now, we see our reserves going up and up and up, but what people don't see is that we are not repaying our debt. The moment we start, I think there is the ACU debt and also the Indian credit line due in the next maybe few months or maybe during the next year. So once those start getting repaid, right, reserves can go down. And also there could be a hit into FDIs, given that there is political instability, right? The main reason why FDIs hasn't been coming during the last couple of years is because of the crisis. So all of that can cause delays in terms of that.
If you like Kaleidoscope, subscribe and follow us on YouTube, Facebook, Instagram and LinkedIn.
You focus on your goals. We will take care of the risks. Ceylinco Life.